Matthew with us then for the business this morning, and after a strong start to the year, the markets have been falling, as we were saying an hour or so ago. Any sign of any improvement yet?
Well, as you rightly say, Stuart, yes, we've had 3 days of falls after a year of things going well, all stoked by worries about Greece and the bond deal, Eurozone recession likely, and of course this slightly lower than expected Chinese growth. We can actually take a look at European markets and see how they are opening up this morning, and there we see a bit of a mixed picture. They're all sort of wavering around at the moment, so a lot more trading for today to see what really happens. Bit of company results. Adidas has announced it's got record earnings for 2011, up 18%, and the company expects a good year in 2012 with the Olympics, of course. Over in Asia, things have wrapped up there, and we can take a look at their markets, which are also following that pattern from this week, all down in the red. Australian growth, I should add, we got those figures through, 0.4%. That was about half of what analysts were expecting.
OK, well, time is running out for investors to decide if they'll say yes to a deal on Greek bonds. With just 1 day to go, the government in Athens says it's optimistic enough will sign up to avoid a default. If they don't, the country risks losing its vital next round of bailout money. Nicholas Rushworth has the story.
The clock is ticking and the stakes have never been higher. Greek private creditors have till Thursday night to say if they'll participate in a bond swap. That's a crucial part of the country's bailout deal. The Greek government is asking banks and other creditors to trade 206 billion euros worth of bonds for new ones with a longer maturity rate and backed by the EU. The catch? They will have to forgive some of Greece's debt and accept a major loss. So old bonds worth more than 200 billion euros would be valued closer to 107 billion. It's not an attractive deal, but without it, Greece would likely be forced into default. That would trigger credit default swaps, causing possible market panic. On Monday, a group of major bondholders backed the deal to halve the value of their Greek holdings, and Athens hopes between 75% and 90% of its creditors will also sign up.
90% might be challenging, but it's likely that the Greek government will have at least 70%. The biggest question mark is hedge funds. Traditional banks have all or most of them mentioned that they will bring the debt to the swap.
Along with a series of austerity measures, the bond swap would clear the way for Greece's next round of its 130 billion euro bailout from the IMF and the EU. Analysts warn of a catastrophic domino effect if the deal doesn't go through. A disorderly Greek default could cost the Eurozone up to 1 trillion euros.
Let's pick up on a few more of the day's business stories. And big French businesses can expect higher tax bills if Nicolas Sarkozy is re-elected in May. Speaking in a television interview on Tuesday, the French president said some large companies don't pay any tax at all. In France, he plans to get tough by setting a minimum tax rate for the country's biggest firms.
Lehman Brothers has emerged from bankruptcy after its failure in September 2008. The bank's collapse is often billed as the start of the financial crisis. The legal move clears the way for the bank to pay back some of its creditors. It projects having around $65 billion to pay back the $350 billion it owes.
The former finance chief at Porsche and 2 other managers have been charged with credit fraud. Holger Hertha has been accused of lying about the company's finances during its failed takeover of rival Volkswagen. Prosecutors said the 3 managers are accused of understating the company's finance needs by 1.4 billion euros as part of a 10 billion euro refinancing.
And in the biggest Ponzi scheme since Bernie Madoff, one of America's richest businessmen was jailed yesterday for stealing $7 billion from his customers. Alan Stanford was convicted by a court in Texas of using the money to fund a luxury lifestyle which included Caribbean islands, newspaper titles and aeroplanes.
Now, here's the big question of the morning. Are you bored with the colour of your car? Assuming you got one, of course. I haven't, so doesn't affect me, but you may well soon be able to change it to match your eyes, your shoes, or even your outfits. Just one of the innovations that car makers have been showing off at the Geneva Motor Show. Stephen Carroll has more.
In Geneva, the future of driving is bright. In fact, it can be whatever colour you choose. This is the Toyota Fun V, a completely customisable car. Its appearance controlled by smartphone. And it comes with a virtual assistant who can plan your journey or even book you a restaurant.
As soon as you enter a town, a map of it will appear. If there's a traffic jam, for example, it'll guide you round it, or if you want, towards a parking space.
Another innovation, a car that can detect when the next traffic lights will turn green. Unlike the car on the left, it doesn't have to stop and start. Just slow down, which saves on fuel consumption.
The goal of all of this is to make driving more enjoyable. Warning devices can head off problems, so you can focus on the pleasure of driving.
Now on the dashboard, voice recognition.
The Beatles, en cours.
After a difficult year for the motor industry, car makers are thinking small. Opel is targeting young drivers with this model. Its top speed can be changed to match legal requirements for inexperienced motorists.
Intriguing stuff. I'm not sure it's going to catch on, though. Same with this next story, actually, because have you ever had a craving for sweet, sticky cakes when the shops are closed? Well, a new concept may be just what you are looking for. Apparently the world's first cupcake vending machine. Kidding you not, I kid you not. It's open in California, hasn't it?
Yeah, for anyone with a sweet tooth. Have you got a sweet tooth?
I've got an incredibly sweet tooth, which is why I insist on not having any cupcakes anywhere near me, because I'd eat them all within 10 seconds.
Yeah, okay. There's vending machines for baguettes in France, but maybe a cupcake one would not be welcome for you.
For me, no.
But so this is an idea in California. This is launched. We can see it there operating. A cupcake vending machine where you can select the one you want, and a robotic arm goes and picks it up in a nice little box there as well. The idea came to the owner of the Sprinkles chain of stores in the US, and we can actually hear a bit more about how she had this idea from the company's IT director.
The concept actually came to our owner, Candice Nelson. While she was pregnant, she had a cupcake craving, so she decided, wouldn't it be great if she could go someplace where she could get a freshly baked cupcake at any time? So the idea was born, and here we are today with the world's first machine that allows you to actually come in any time, 24 hours a day, to get a freshly baked cupcake.
I must say, I sort of quite fancy a cupcake now. I think it would give me a bit of a boost after being up so long.
After seeing those images.
They're not cheap, though, I should say. $4. It's about €3 for a cupcake. Yeah, it's not cheap, but if they've got as much sugar, and if they're really, those nice moist ones that...
the trouble is doing this kind of shift, we have to be in at 4 a.m. and a cupcake machine in the corner would not be a good idea. It'd be empty within half an hour, I think.
Yeah, I think so.
Excellent. All right, perhaps we'll put one in the back corner. Thanks very much, Matthew. More from him tomorrow morning, of course, during this time of day here on France 24. The latest headlines coming up with Claire really shortly. Stay with us if you can.